proportion of the cost incurred, the government grant is to be recognized in the subsequent year if it is related to non-depreciable asset and fulfilling condition is a mandate attached to it. Then government grant which is not directly related to a single depreciable asset but is related to block of a fixed asset, then the government grant is to be reduced from the return on value in a proportionate basis. And government grant receivable as a compensation of losses incurred, electricity duty and all those things as we see, they should be recognized as income of as period in which it is receivable. So these were 4 types of grants that we discussed. These 4 types were related to fixed asset, depreciable fixed asset, related to non-depreciable fixed asset, related to block of fixed assets. So the first 3 are related to fixed asset. 4th one is the reimbursement of expenses, and the 5th one is the residual category. Now in this 5th one residual category, it says that if the government grant is of not belonging to any of the 4 categories, then it has to be offered as income over the period necessary to match with the related cost. And government grant in the form of non-monetary assets, then it should be at the acquisition of cost. So this is the scenario with respect to government grant. There have been arguments with regard to government grant as to whether it is a capital receipt and not required to offer to tax at all. Now after ICBS 8 government grants have been prescribed, you are left with only 2 options. Either you receive from the fixed asset or offer it as an income. There is no third option that you can claim it as a capital receipt and not offer to tax either way. And therefore, we take the example of the district industry center subsidy, that is in a regular in and out that we see. And we now discuss the taxability of such subsidy. Now here is an example that we see that I have been sanctioned based on the investment I that made. I have been sanctioned, suppose the government grant of 40 lakh rupees in the month of March of that year. Say March 22, I have been sanctioned a government grant of 40 lakh rupees. This is a gross amount. That yes, your investment is 1 crore rupees and so 40% is the eligible amount and therefore your gross amount of government grant is 40 lakh rupees. Now how this grant is to be computed? It is in the form of reimbursement of your GST, input credit and GST what you pay. So every year, whatever GST you are liability, based on that, you submit your GST returns, you submit your GST audit report, and based on that, they will calculate the proportion of this 40 lakh rupees, and you will be allowed a further sanction for particular component out of this 40 lakh rupees for that particular year, the government grant. Now, in this scenario, let us discuss this issue as to what treatment do I do to the subsidies that are being received in this form of the government from the district industry center. My plain opinion is that when I am sanctioned 40 lakh rupees as a gross amount, that time no recognition is required because I am not entitled unless I go further. Now for the coming to the next year, that next year within this 40 lakh rupees, I am found eligible for 5 lakh rupees as a reimbursement of GST. And I have been given sanction letter for this 5 lakh rupees, but I have not received it by 31st March. Now what do I do? Because there are different scenarios when we see this with reference to different types of government grants that are discussed in the ICBS. Because 40 lakh rupees is 40% of my fixed assets. Calculation of the grant eligibility is based on the quantum of investment in the fixed assets. Eligibility or actual reimbursement to me or actual receipt of the government grant is in the form of reimbursement of quantum of the GST input credit to the GST payment. So is it a revenue grant or is it a capital kind of grant? Meaning that should I reduce this government grant from the return on values of the fixed asset or should I offer this as an income in the profit and loss account? Is the question that is before us. Right. Now the word relatable or relates to, it is neither discussed in the ICBS nor discussed anywhere in the technical guide issued by the institute, nor do we take any precedent so far available. According to me, my opinion, when you think of relate to, that means it has to have some connection with its acquisition cost. And therefore, here this 5 lakh rupees out of 40 lakh rupees, though it is the quantum calculation is based on investment in the fixed asset. It has nothing to do with this cost of acquisition. It is not in the way of reimbursing your capital expenditure in the fixed asset. It is in a way a reimbursement of your GST outgoes, because the calculation actually, the quantum 40 lakh is overall saving is based on your investment in the fixed asset. This is your overall eligibility. But year-to-year eligibility or year-to-year receipt, sanction and receipt of the grant is based on your GST outgoes, and therefore my opinion this is that this grant, whenever, whichever year sanction, there is no virtual certainty, but there is a reasonable certainty. Because going by the precedent, basically it is a grant from the government. One day or the other you are going to receive, and therefore the grant is accrued to you. And if there is a sanction letter from the from the BIC of this 5 lakh rupees, sanctioning this 5 lakh rupees properly calculated based on your GST data given to them, GST return, GST audit report for that year, for earlier year, for that. Because what you did in 2022 will be considered in the 2022-23, and accordingly you submit your documents to the SA, that quantum of GST portion will be sanctioned properly to you out of this overall saving of 40 lakh rupees. So my opinion goes like this, that this 5 lakh rupees is a reimbursement of your GST outgo, and accordingly it should be offered to tax as income. If any other view, we can definitely discuss. If any other view here right now we can discuss.
Basically, purpose is to encourage the industry, not their capital.
Purpose is definitely right from beginning it is that. In spite of we having this 43-1 and before even ICS assessment year 17-18, we used to treat this as capital receipt. We were not even reducing from the fixed asset cost. We were not even implementing for the exponential and taking section 43-1. Can we now take that stand opposite? Now yes, 41 exponential came to section 41 applies. Now you are saying that it relates to fixed assets. Previously you said no, it is not.
In the EC also they are giving the cap every year.
Yes, I know.
Cap they are giving.
EC also they are giving the cap, but the calculation mechanism is reimbursement of outflow of your GST.
In my opinion, GST is only the method of valuation, but basic purpose to encourage the industry based on their capital. So it should be reduced from the top of assets.
Many times, okay, practical difficulties leaving aside, we will discuss only the principle. We will discuss only the, yeah.
There is one more issue I am negating from that. In case of private